Good morning, good evening, good afternoon. Happy holidays, everyone. Welcome to the Finance Rebel Show. My name is Kamari Ellis. I am the Finance Rebel. The Finance Rebel Show is all about increasing your financial IQ. And in order to increase your financial IQ, you're going to have to do a couple of things differently than what the good old system wants you to do. So basically, the good old system wants you to be in debt, wants you to be poor, wants you to be broke. And the way they do that is by training you to be a consumer and an uber materialistic type person. But that ain't the way to go. Obviously, we all have to buy things and just for everyday living, but we don't have to be consumed by those things, if that makes sense. So, in order to truly become financially free, we talk about things like money, wealth, investments, taxes, business. And today we're going to be talking about Starbucks. So today I got a question, more like a statement, but I got a question about Starbucks from a friend of mine on Facebook. And so the question was, let's see, let me pull it up here. The question was, Kamari, in my humble opinion, Starbucks is a struggle stock. I've watched them for a few months and they honestly struggle to go over $89. What's your take on it? So just to give you a little backstory, right? My homegirl, Kay Renee, she's also an ex-IRA auditor, very, very smart lady out there on the West Coast. But she's a relatively new investor. And usually with relatively new investors, they like to see things going super fast. They want it like that. They want that microwave special. They want to put $1 in and take $1 million out tomorrow. But that ain't how it works. Right. And, Kay's my homegirl, love her to death, but she definitely has some of those traits. But again, I say all that in love because it's part of the process. Most people that start investing into the stock market, they wanted to see it go really, really fast. Again, they want that dollar to turn into $1 million tomorrow. But sorry, that's just not how it works. Now, some of the things you should be thinking about with investing in companies is, how can I make my money, make more money in the long run, right? So the whole goal of investing, right? The goal of investing is, let's say, put $1 in, and then somewhere down the future, again, that dollar's a dollar you don't need. You don't need that dollar for your light bill, for your food bill, put gas in your car, to take any of your loved ones out for a romantic dinner. You don't need that dollar. That dollar is for future growth. That dollar is for creating future opportunities. That dollar is to create wealth. All right. And we know we can't create wealth by going to spend money at other people's establishments, unless you are doing some type of retail arbitrage. But we'll talk about that another day. But again, the whole goal of wealth is to take that dollar, invest it in something that can create $2 for you, $3 for you, $5 for you, somewhere along the line. Now, I encourage all new investors to pursue the path of a long-term investor to start. Why? Why, Kamari? Why do you tell people that? Why, after all these years in the industry between accounting and institutional investments, basically working on Wall Street, why do you tell people to start there? I tell people to start there because it's the easiest way to start. Oftentimes, people are really, really intimidated by investing and intimidated by Wall Street, and they think it's for the uber rich and those folks who have 3, 4, 5 generations of wealth. It's not. It's anybody can do it. You can literally start investing now with $1. Cash App made it possible to start investing with $1. I used to say $25, but you can literally start now with $1. You don't need a whole lot of money. And guess what? Investing overall isn't super duper complicated. The biggest thing about it, I would say to start, is to buy into good companies, into stocks that have good companies. So, for example, if this company has a lot of money, makes a lot of money, is established, has a good product, you understand how it makes money. Again, you should also invest in things that you understand. Never invest in something that you don't understand. All right. If you can do all those things, then it's something for you to easily qualify for. I suggest all new people to start one with long-term investing and also to start by investing in things that they know, invest in things that they buy, right? So for example, I've got iPhone products or Apple products, all over the place. Here's my iPad. I don't have a MacBook, but guess what? I got an iPhone too. I'm actually broadcasting live on IG right now with my iPhone. So, I just brought some Apple stock not too long ago. Something else I use a lot, Amazon. I bought a fractional share of Amazon because when I bought it, it was like $1. It was like $17. Saying hello to Vanessa. Hey, Vanessa Braxton, how are you? You tagged me in your pre-IPO group. Okay, I'll definitely check it out. So again, I say buy things that you know, buy things that you understand, buy things that you buy, right? And I should say invest in things that you buy. Okay. So again, I brought Apple, but guess what? I also brought Starbucks. I drink a lot of coffee. I have my Starbucks mug. I got my Finance Rebel mug here, right? So, but I did buy some Starbucks stock. And I suggested to my friend whose post I just shared to you that I'm reading my IG post. I'm going to come to you, Marco. And I suggested to my folks that asked me about investments again to start with what you know. And I started with Starbucks. So that's one of the things that I brought. And I shouldn't say I started. I've been investing for decades. But I'm trying out Cash App and I've been testing out Robinhood. So I brought some things in both of those. I brought some things in Cash App specifically. I brought Starbucks and Cash App as a test, just to test out the platform. And I like it. But anyway, I suggest a lot of people buy what you know. I go to Starbucks a lot. My buddy whose post I just showed you, K. Renee, again, it said, Kamari, in my humble opinion, Starbucks is a struggle stock. I watched them for a few months and they honestly struggled to go over $89. All right. Just wanted to get that up there for everybody, who didn't see that previously. So and by the way, K. Renee shops at Starbucks. She goes there a lot. And that's why I suggested to Kay that she buy some Starbucks stock. Now she's brand new. Now, when you read the post that she tagged me on Facebook, she said she's been watching it for the last few months and it hasn't gotten above 89. So in full disclosure, I did a YouTube video about Starbucks back on September 12th or 13th, something like that. And Starbucks stock was trading at 94-ish, 95-ish, somewhere around there. So it's definitely had a pullback or a drop in price over these last couple of months. If that happens, that happens. Now, the reason I tell people to be a long-term investor is because the markets will go up and down, down and up, side to side, back and forth. Sometimes it's really like a roller coaster. And so if you don't understand that, it can be very frustrating for you because sometimes it'll just be stagnant. And that's okay. Again, the reason why I tell people to be a long-term investor is because everybody is kind of programmed in this generation and previously to have instant gratification. Everybody wants to do instant gratification. That's what their mindset is. That's where the culture is. I mean, if you look at the current landscape of folks we have on, if you look at the current landscape of politics, everything is instant gratification. But those who are truly wealthy, my hero, Warren Buffett, has been doing this for quite some time. And most of the people who are really dedicated to a long-term strategy typically have less stress in their life because they're not trying to check the stock market every 5 minutes or every day. And so, again, that's part of the reason. Also, part of the reason why I suggest a long-term perspective is to take your time, to give you time to really learn and understand the markets. I could whiz through a whole lot of stuff. I can say, buy pairs, short one pair, go long the other pair. I could say, buy puts and sell calls. I could say all this other kind of technical jargon, and it doesn't necessarily mean anything to you, the individual new investor, right? Because again, the goal is to get more people investing into the market because it's one of the best ways to create wealth. And so I say just start slow. But again, going back to Kay's comment was she's been tracking it for the last couple of months and it hasn't really done anything. And so I said, I'm going to pull up the chart of I'm going to pull up the chart. Hold on one second. I have to stop sharing my screen. But I'm going to pull up the chart of Starbucks, and we're going to walk through the chart of Starbucks. Now, I share these on YouTube and Facebook. The plan is to also launch these as a podcast as well, but everybody won't be able to see the screen, but I'll do my best to walk you through what I'm looking at. All right. Which one is this? Let's see. Nope, that's not the one I wanted. That is not the one I wanted. So bear with me 1 second. Give me 1 second. I'm going to pull the chart up, and everybody can kind of look at what's going on with Starbucks. By the way, I want to get into some of the reasons why I like Starbucks as an investment, as a company. I really like Starbucks as a company, not just because I spend a lot of money there. By the way, to get ready for the holiday season, I stopped going to Starbucks as much because I had to buy the wife and the kiddos some gifts for the season. But while I'm bringing this up, I want you to understand Starbucks right now is trading at $88.25. And so if you remember, I said I talked about Starbucks back on September 12th, and it was about $96. But just to get a better understanding of Starbucks, Starbucks is a $104 billion company. Again, $104 billion. That means Starbucks is worth currently today, per its market cap, $104 billion. It ain't no lightweight. All right. It's playing with the big boys. Starbucks currently has a dividend of 1.86%, which means that you will get $1.64 for every share of Starbucks that you own. I don't know. I'm starting to phase out here. This doesn't look good. I might have too many things going on at one time. But at any rate, you get $1.64 for every share of Starbucks you own. Last calendar year, Starbucks made $26.5 billion, $26.5 billion. And the net profit, basically what they got to walk away with and put in their pocket after all the bills were paid for, was $3.5 billion. Starbucks serves 100 million customers per week, which turns out to be annually $5.2 billion customers served annually. All right. So basically they're doing revenue of about they're having visitors. I'm sorry, let me back up. They have about 14 million visitors in their stores daily across the world. And they have roughly about $72 million in revenue daily across the globe. Does that sound like a lightweight to you? Does that sound like a company that's kind of struggling to find its way? All right, so I think my machine's frozen. I'm not sure if I'm still broadcasting live or not. Hopefully I am. But if I'm not, I'll just come back and redo it. But that's not a lightweight company. That's a company that's established. That's a company that has a lot going on, that has processes and automations together. They know how to make money. Every company does not know how to make money. But what happens is with a lot of new investors, again, they get very excited. They get antsy. They want to see, okay, I'm live, but I just have a black screen. All right. That's not cool. I guess maybe I'm doing too much. But, every day they have customers coming in. They're making money every day. And new investors, they want to see the stock price rise every day. But that's not how the stock market works. And so just to kind of break down for everybody how the stock market works, the stock market is an auction. It's a big auction. That's where it came from. That's what it is today. Before they used to do it with human beings. Now it's basically done with computers. But you have somebody that usually wants to buy and somebody wants to share. And they usually meet somewhere in the middle in terms of price. Every now and again, the prices don't add up. Prices don't match. Pricing does a lot of crazy things. Now, one thing I believe, I didn't say this, But the stock market is like the ultimate reflection of human emotion. You will see every type of emotion take place in the stock market, from fear to greed. Now, when people are typically greedy, you'll see the stock market typically go up. They're in good spirits. They think all is well in the world. They feel that there is money to be made. So they're investing. Not necessarily knowing what they're doing, but they're investing. When they're scared, whether the scare is real, whether the scare is legitimate, they will sell and they will run for the hills. I reference 2008 a lot with the Great Recession, because it was a time when I was working on the market. It was a very, very scary time for a lot of people. And I saw a lot of people make really, really grave mistakes, especially mistakes when it came to the retirement accounts. People sold at the bottom of the market. People sold when they were scared. People sold when they didn't have uncertainty. Now, if you listen to certain people like a Warren Buffett, he didn't coin this phrase, but the phrase is very accurate. The time to buy is when there's blood on the street. So basically, everybody has panicked when it's time to buy, and so you see these things happening. You see these major stock price drops occur, because for those companies that are established companies, again, those companies that are established companies, if they are a real company, their stock price will bounce back, and it will bounce back relatively quickly. Right now, blood is coming to the street. Marco, I would say they've been saying there's blood on the street or blood coming to the street in terms of recession for quite some time, actually since the end of the last Great Recession in 2009. But the market's still doing well. The economy's still doing well. It's not perfect by any way, shape, form, or fashion, but I wouldn't be banking on a recession coming. And again, for new investors, I wouldn't worry about a recession. Here's why. I wouldn't worry about a recession right now, because if you look back in history, the stock market tends to go up anywhere between 7 to 10% a year. And we're going back decades, at least 50 to 60. That's what it does. Why? Because U.S. companies, and I'm only really talking about the U.S. stock market right now, U.S. companies tend to figure out different ways to be innovative, different ways to create wealth, different ways to create products and services that the people want and need. That will probably continue to happen. The only way that the market, I would say, really, really blows up is if the end of the world came. And if the end of the world came, none of us need to be worrying about the market anyway. We need to be worrying about food, clothing, and shelter. Some of my gold-loving friends would say, well, buy gold. But I would say, no, don't buy gold for the end of the world either, because they ain't going to want that either. But that's another conversation for another day. Just having fun with y'all a little bit. But again, when it comes to long-term investing, you want to think long range. I say anywhere from 5 to 10 years. 10 years, ideally, when you're first starting out into the markets. And that doesn't mean you can't make any moves when you first start out. That doesn't mean that you got to sit in the same stock the whole time. I don't believe in buy and hold. I believe in buy and watch, right? Buy and observe, because different things will happen to a company along the way. Management changes might happen. Major things in the economy may change. If Starbucks if there were to be a coffee shortage around the world globally, where you couldn't get any Tanzanian peaberry coffee from Tanzania, then that might be a problem. But I don't see that happening. I don't see a coffee shortage happening anytime soon. So again, Starbucks, understand the business model. That's why I always say, understand when you're first starting off to invest, understand what it is that you're investing in. How do the companies make money? Back during the internet boom in 97, 98, 99, 2000, 2001, people were buying everything. Most of those companies, though, didn't make money. Most of those companies had no way of making money. Most of those companies were relatively clueless, because again, they said, oh, we can go to the stock market, do an IPO, initial public offering, and we can get some free money there. A lot of people got rich, but they also broke down a lot of people as well in terms of not getting their return or even having a chance of building a good company. But again, Starbucks is a good company. It's an established company. I meant to look up how much they had on cash on hand before I got on the air, but I'm sure they have at least $1 billion on hand. And the cash flow that Starbucks is generating by having 100 million, again, 100 million customers per week, forget about it. Like, they're out of here. So, the Starbucks motto is right. Everybody's like, well, how do you get rich off of a cup of coffee? It's not the coffee, right? The coffee is profitable, absolutely. But it's also the other ancillary things. Starbucks will have like an espresso maker in there that's a couple $100. How many, with 100 million people visiting you weekly, how many times do you think people were buying those higher ticket items, those higher profit margin items? I would venture to say pretty often, right? And Starbucks also can predict how much money they're going to make within some margin of error, but they pretty much know how much money they can make or how much money they're going to make because they've got a history, they've got trends. Starbucks has regulars. People, when I go to Starbucks, I'm not one of them. I go a lot, but I'm not a regular. But when people go in there, the baristas know many of their customers' names. What does that tell you, right? And then again, also, people go to Starbucks for the experience. It's a nice place. Now, one thing I will say about Starbucks that I've noticed is that they turn the air down. And they started doing that recently, turning the heat down. And it's pretty cold in there. Now, I don't know if that's because they're trying to get, the people that are meandering in there to get out, get in, buy something, and get out. And they're tired of folks just kind of standing around. Or if, maybe people buy more coffee when the place is colder. I don't know what the study is for that, but to me, it's not the best environment for that. But again, people still go there. I'm pretty sure many of you who are watching today have had meetings at Starbucks. So, again, great environment, predictable money, predictable profit, strong management team, strong prospects overseas. They're still growing in China and in Europe, right? Most of Starbucks money is being made U.S., but again, there's still other profitability or more places to get profit overseas. So they're doing it. Now, I'm looking again at my screen or my tablet, and I am frozen, and that kind of doesn't make me happy. But it is what it is, right? But again, I would tell new investors to, one, think long term, right? This money, that every dollar you put away shouldn't be a dollar that you need tomorrow. Two, be patient. Be patient, be patient, be patient, be patient. Three, look at the fundamentals of the company and is it a good company? And that includes management. Does management have a good track record? And so if you've watched Starbucks over the years, the gentleman Howard Schultz, who he's not technically the founder of Starbucks, but he kind of took it over and ran with it. He went to Italy, went to an espresso bar, came back, wanted to do that, and then kind of brought the original owners of Starbucks out, kind of long story short. But he's been on this wave for quite some time now. He is not the current CEO, but there is someone installed right now that is a very good CEO. And the majority of the team has still been there for a while. So the question would be is, if you think Starbucks is no longer a good investment, should you cash out or should you go? I would look, before you make that decision, I would look at, again, predictable profits, which they have, track record, which they have, customers. Like Starbucks got a whole community. And when you look on your phone and they have those the apps for the reward points and all that, they have billions and billions of people on roll, which means they have millions of people on their email list, right? So they always have ways to communicate with their customers. So again, good product, high price point, right? It's a premium product. You can go other places and get cheaper coffee. Let's be clear, right? And I'll be honest, I'm not really a big fan of Starbucks coffee. I do like some of the other drinks. I like the atmosphere, but I don't go there for the coffee per se. I go there for the drinks. Non-alcoholic, obviously, but um, you want to look at all those things and say, is this a good company? Is this a good company in this industry, in this niche? Who else provides a premium coffee experience? Dunkin' Donuts? No. Um, what's some of the other ones out there? Um, I can't think of the name of the. There's a couple others. Um, I can't think of the ones. Panera Bread is kind of in the same vein. Panera kind of skews more towards food, but they're definitely competitors. Um, there's not many others. Maybe some of your local coffee houses. Like I'm in Philadelphia. We have Uncle Bobby's. Shout out to Uncle Bobby's. We have another place called Amalgam. So Uncle Bobby's is a bookstore. Amalgam is a comic book store, but they also sell coffee as well. It's like niche coffee, like houses. Those are all good. They make a great cup of coffee, but they can't do the scale that a Starbucks does. And so, answer my buddy's question, Renee. I still think Starbucks has a ways to go. I still believe that you should be patient with waiting on Starbucks. Don't think you're going to put $1 in a day and get $1 million tomorrow. That's not how the game goes. And Starbucks pays a dividend. So you are getting paid to wait. You're getting paid to wait. That's one of the benefits, one of the perks, the perk of being an investor in a publicly traded company. Many of them will issue a dividend. What is a dividend? A dividend is basically the company saying we're going to share some of the money we have in our coffers and our bank account with our investors. We want to kind of thank them, give them a little token of appreciation for taking on the risk with us, right? Because there is no reward without risk. There is no profit without risk. You can't make money without taking a risk. All right. So, again, for some reason, this all has frozen up on me. I'll probably come back and do this again. Maybe that time will be better. But again, I'm Kamari Ellis. This is the Finance Rebel Show. Finance Rebel Show is all about increasing your financial IQ and telling you to leave consumerism and materialism alone because they are the enemy of becoming wealthy. So I'm going to check off for right now, but I'll be back. But listen, if you have any questions about stocks, investments, I talk a lot about taxes. Again, anything tax, business, investment, business, we talk about here at the Finance Rebel Show. Shoot me a text and just hashtag Ask Kamari. Shoot me a text, hashtag Kamari, and text me at 484-278-1357. Again, 484-278-1357. And either I will include the questions in my weekly Wednesday Q&A, or maybe I'll do it as a part of one of the shows. It all depends. But I'll talk to you all soon. Enjoy your holiday. Remember, it's Kwanzaa, and I'll see you all later. Have a great day. Bye-bye. Oh, and I can't. Wow, this is funny. All right, so I'm back, y'all. I'm back. I kind of ended the broadcast, but I'm back now. So do me a favor, if people are still on and you can hear me and everything's fine, put a one in the comment section for me, please. Because I don't want to talk just for the sake of talking. And I thought the broadcast had ended, but I'll go through and answer some questions real quick. Ben, I think Hatchet. How many tabs? I got way too many tabs open, Ben. You just called me out. Why you do that to me, man? Good afternoon, D. How are you? Thank you for joining the Finance Rebel Show. Again, if you all can hear me good and see me good, just put a one in the chat. Put a one in the chat for me so I can know. Because Fabian, now this is what I'm talking about. You get paid each quarter and you have an asset growing which you can pass on to loved ones. Yes, Christopher Patton Walker, you are 1000% correct. One of the big benefits of being a stock owner is being able to pass it on to your loved ones. Now, a lot of people don't realize that when you do pass on stock to your loved ones through proper estate planning, you get what's called a step up in basis. Now, I'm not trying to bore y'all, but I think this is a great point that many people should think about. So basically, when the stock goes to the next generation or whoever you've left it through to, and let's say you bought the stock for $1, but today it's trading at 25. Well, guess what? That stock you bought it at 25 on that day, because that's the day you took ownership. So you don't have to pay the taxes that you would have had to pay had you bought it at $1, right? So from $1 to 25, that will be a $24 gain. And anytime you sell stocks and you make money, you have to pay what's called a capital gain. And that will either be a short-term capital gain, which is a year or less, or a long-term capital gain, which is a year or more. So just, keep that in mind. And you can literally take dividend stock and build a whole portfolio for yourself and have that really, really, really pay for your lifestyle. I mean, I say all the time, dividend stock are the stocks that keep on giving. One of the best gifts ever. Okay, Michelle Stewart says, yep, they bounced back like Tesla and Apple did this year. Yes, not a Tesla fan. Don't see the value in Tesla. I'll come and do it, but Tesla's on fire. To me, Tesla is one of those stocks I talked about a little bit earlier in the broadcast. It doesn't have a lot of great fundamentals. They have Elon Musk. Elon is a genius. So far as the company, though, the company is not profitable. And I don't think they're going to be profitable anytime soon. So again, if you're new, you're just watching, I'm Kamari Ellis. This is the Finance Rebel Show. This is the show that's all about increasing your financial IQ. We talk about all things money, all things wealth, investment, tax, stocks, business, small business, insurance from time to time. We talk about it all. So every Wednesday we do a live Q&A from 7 to 8. We didn't do one this week because Christmas was here. Last week we did one. I think I did almost 3 hours live just answering questions because, I think this is very important. I know this is very important. People getting their money together is absolutely important because not only does it affect you, but it affects your overall family, from your immediate family to your extended family. The more money you have, the more things you can do. All right, so Ben says, I've been on dividends for years. I don't have much time to watch charts in order to day trade, so I grab Apple, Microsoft, and a few others and get free money every 3 months. Smart man right there. And I didn't talk about this a lot, but he kind of alluded to it here. So there's a lot of publication. There's a lot of people promoting trading. And he talked about day trading. 95% of people that day trade typically lose their money. Trading's not bad, though. That's not what I'm saying. But trading is not for everybody. Just like I could never be LeBron James because I'm not 6'9". I'm only 5'9", right? So he's got 12 inches on me. So his basketball ability is going to way further exceed what I could ever even fathom. There are certain people who are really good at day trading because they have the emotional makeup. Like anytime you're dealing with money, it's an emotional thing. And if you have a hard time dealing with the emotions with day trading, where you're dealing with the ups and downs of the market every day, it can be really hard. It can be really hard. So again, I suggest people start off with long-term investing, $25 a month. That's all it takes. Ben Hatchett makes more sense. Okay, y'all must be having a conversation. I'm not totally sure about that. Yes, Vanessa, Starbucks has a massive distribution network, and not just their stores, but also their other, they utilize other distribution points like supermarkets. So their coffee is for sale in other supermarkets. Chris says, and how much to buy one share of Amazon? You know what? Give me 2 shakes and I'll look that up for you. I would bring it up on the screen, but I feel like my computer probably needs a reboot at this point. And so I don't feel like going through a freeze again. So I'm just going to play it safe. But Amazon right now is $1,869.80. $1,869.80. That's where that's where Amazon is at today. And in the beginning of the year, Amazon started at $1,501. Today it's almost $1,900. So that's an increase of over $300 throughout the year. And I'm just checking to see what percentage that is. So that's about a 20% increase. I mean, it's not as good as the overall market, but that's still a pretty good rate of return. Yeah, Vanessa, you are so correct. Not Amazon, Switch. Starbucks has a film studio and music network as well. Yep. Okay, it looks like I'm probably reading these backwards. So let's see. Let me see if I can. Okay, Javon Christian, I'm new to investing, etc. Okay, good. If you're new to investing and you want to get with a bunch of people who talks about investing in money all the time, come join the Finance Rebel Academy. Just put it in search on Facebook, Finance Rebel Academy. And I'm typically in there pretty often, either answering questions or kind of doing some private Q&A and presentation type stuff. Can we work together to build a demographic for can we come together to build a portfolio for different demographics? Chris Patton, if you're still on, elaborate on that. I don't want to guess, so elaborate on that for me. Do you get dividends on your own dividends given? So yes, one thing you can do is reinvest your dividend. So you got 2 ways. You can either, one, you can take the dividend as cash, or 2, you can take it as stock dividend reinvestment. And sometimes in certain situations, the company will only offer a stock dividend. So you got to kind of be aware of that. But for the most part, they tend to be cash. How are dividends paid? Again, they're paid in cash, and yes, sometimes it can be credited to your account. Okay, Chris 6 still here. Also, for everybody that's here, remember to like the Finance Rebel page or like my YouTube page. I'm literally broadcasting live on both platforms. And has that. You have Apple stocks, but Apple. Hey, that's fair. I love Apple products. I bet my machine wouldn't have froze like that had I had a MacBook, but that's a conversation for another day. But yeah, if you are anti-Jobs, like a lot of people don't like Steve Jobs or they don't like Apple, that's cool. It's really about just recognizing the opportunity. I mean, if you look at Apple over the last, 10, 20 years, you can see that your love or dislike for the company really don't matter because they have enough customers that are willing to spend their money on their premium products. Don Johnson, you don't like Apple products either? Come on, man. What's up with y'all? all y'all anti-Apple people. Now, I don't want to say your name wrong. I want to say it's Tawanya. Tawanya Nicole says, I have stock in Starbucks. Good. Congratulations. Good for you. Where did you buy it at, Miss Nicole? I don't like messing up people's names, so forgive me if I messed up your name. My name's Kamari, right? So y'all can imagine how many different type variations that I've heard. And it's easily phonetically spelled, but people don't get it. So you can get on YouTube and they have a ton of different people's portfolios. Come on, Don, why you promoting other people's stuff? You're supposed to be my homie. I'm just playing. Costa Coffee, Dutch Brothers. What's Dutch Brothers? And is that a publicly traded company? Chris Patton says, I would love to be able to track a portfolio of Kamari for different types of investors. No financial advice. I would love to track a different portfolio of Kamari for different type. What do you mean by that? I mean, so I don't usually put out what I'm buying for my clients. I don't really have a whole lot of clients that I'm investing money for these days. I got a few. The reason why I don't put it out, because I'm not afraid to put it out. I don't put it out because of compliance. And the SEC likes to sue innocent people and let all the other guilty people just roam freely for years and decades and decades. That was a little sarcasm about Madoff, but whatever. But yeah, I have no problem with that. I think I can do that if I do it privately. So like if I get people onto a mailing list, I can do that. And I have thought about that, but I'll think about that some more. So you need to break things down in terms of demographics. What you talking about? What Starbucks demographics are in terms of who their customers are? Help me out, y'all. Okay, Ivory Star says black slaves were sold on Wall Street. They created it, control it, build your own systems, build, create, produce your own. Stop making your enemies rich so you can get some money, profit, and they sold your race of black people, and you are in their system. House Negroes equal. Now you're Black history. I try to avoid race stuff on the Finance Rebel show. Not because I'm afraid of it, because I have a whole separate platform for it, and it's called the Black Wealth Project. But I talk black stuff all the time. Yes, there were slaves that were sold on Wall Street. No doubt about it. No doubt about it. There's plenty of banks that were involved in the slave trade. There were insurance companies, like one that was involved was New York Life. There was a time where black folks could not even invest in the stock market. Now, here's the thing. You can take that analogy and apply it to everything. You could say that slaves were transported on ships and planes and even some cars, because slavery didn't just end in 1865. There were instances of slavery, at least in the United States, up until the 1950s. Right? And so you can make the analogy, or you can make the argument that you shouldn't invest into a thing because of what happened in the past. And I'm for that, and I respect that, right? I respect your opinion on that. But what I would say is that you're invested in stock. Most of black folks are invested in the stock market anyway. And I'm going to tell you why. Most black people, the biggest employer of black people is the government. Most governments have pensions. Most pensions, guess where they invest? A lot of them invest in prison stocks. There's absolutely nothing you can do about that. You have absolutely no control over that. What I'm offering, or what I'm suggesting, is that you be an active participant in your own wealth creation. One of the best and easiest ways to invest is through the stock market. And guess what? You don't just have to invest in companies that do bad things. They have this whole thing called, I'm going to call it social responsible investing. There's a couple other acronyms for it as well. But if we just go off of the premise that don't be involved in something because it was involved with the stock market, then, well, we shouldn't live in any of the major cities on the East Coast at all. We shouldn't live in Texas. We shouldn't live in Kansas. We shouldn't live in anywhere where there had slavery. And so I don't think that's practical. I don't think it's pragmatic. And again, respectfully, like, I'm for my history. I am for Black history, and most times it's not taught at all. And so I'm a big history buff. But I do think if we're going to talk about history, we got to look about it from a practical standpoint. Do I think reparations is due? Yes. Guess what? I don't think we're going to get it anytime soon. I'm a big proponent of going and get your own reparations. At some point, I'm going to do a video about taxes, right? I think one of the biggest ways Black folks can create their own reparations is by leveraging the tax system. I just haven't had a chance to do it yet, because a lot of times we let a lot of things go, and we are not aggressive enough, not illegally, all legal. I'm not talking about anything that can get you in orange jumpsuits, but we could easily leverage the tax system more to create more of a reparations or sub-created reparations for ourselves. But again, like I said, reparations is definitely owed. The country got trillions of dollars of free labor from us. I really don't care, because there's a whole movement about who's a U.S. citizen versus who's not a U.S. citizen. Because when you look at it, Black folks have not been treated properly from an institutional standpoint ever in this country. But, again, I could go on and on and on about that, but I wanted to honor your question because you came to watch the show. So I appreciate you watching the show. So Ben said, yes, he spoke about the short-term decline, but he looks at 5 to 10 years. Yeah, I look at 5 to 10 years. And again, this is for new investors. And what I find is, right, when a lot of these new investors, they see the commercials, they see people talk about trading, they see about the instant gratification, they're hooked. And then a lot of them come to me and say, well, Kamari, what's this? What's that? They don't understand the overall market, right? So again, trading isn't bad, right? It's just not for everybody. It's just like being a NASCAR race driver isn't for everybody. Sure, you could do it. You could even drag race on the streets. But when you're a drag racer, you have to train for it. People don't just get in a car and do it. If you are brand new to driving, I would never suggest somebody be a drag racer or a NASCAR driver, right? Learn how to drive first, then learn how to drive fast and start training your reflexes. A lot of that is very applicable to the stock market. Okay, over the last 6 months, Starbucks stock price has dropped a bit, right? I don't know if I would say 6 months. There was definitely a drop from September to now, but I would have to go back and look at everything, Chris, to give you a true answer for that. I think, okay, so you're talking about the pastries. I think the pastries are a huge money generator. Yeah, I'm sure they are, because everybody that buys coffee is buying a pastry a lot of times. It's almost like when you go to McDonald's and you buy a Big Mac and they say, would you like some fries with it? And even if it's only 99 cents, how much is it really? What's the cost of buying fries? It's probably not a lot to buy some potatoes, slice them up, and then put them out there to the world. Black Mama Tea is going to be the Starbucks of tea. Yeah, I want to say Black Mama Tea is going to be the Black Mama of tea, right? Because to me, Black Mama is better than Starbucks, even though I know we're talking about Starbucks. And what's Black Mama Tea? I talked about Vanessa Braxton earlier. Vanessa Braxton was on here. She just raised a whole bunch of money on WeFunder. She has Black Mama Tea and cafes, where this Black woman, right, going back to Black folks, is using the power of, it's Wall Street-esque, right, to raise money for her business, right? And so Black Mama Teas, I believe, is going to do some cool stuff in the future. And Black Mama Teas, I know Vanessa Braxton's goal and vision is to be listed on the New York Stock Exchange. So check that out. You're going to have a Black sister that is listed on the New York Stock Exchange at some point. I believe she's going to do it. But guess what? There's also other Black companies that are listed as publicly traded companies as well. So should we disregard them if they're Black-owned businesses? Robert Johnson has a business that's listed. Radio One, which is Kathy Hughes, has a publicly listed company. Not doing too great. Robert Johnson is doing one. I'm working on a black owner, black controlled stock group, but there ain't a lot of them. And a lot of them aren't, in my opinion, investment worthy for some of the ones that are up there, just being honest. I'm always going to be honest with you. Okay, so pretty sure it's about 1800. So all right, I caught back up. I kind of went in reverse. All right, so again, Starbucks. Should you be buying Starbucks? Should you not buy Starbucks? How should you be thinking about holding on to Starbucks? Again, it would be a long-term hold for me. I brought it. I don't think anybody's going to come in and disturb Starbucks in the coffee space and in that kind of space right now anytime soon. The only way that it gets disrupted is if management falls off and they miss the next wave. So if any of y'all remember Blockbusters, right, you can rent videos. Well, they had an opportunity to buy Netflix. They missed that opportunity. All right. So that's an example of what I'm talking about. So again, it all depends on management. It all depends on their outlook. It all depends on all those things. But I think Starbucks will be around for at least 10 years. And I believe they'll continue to be profitable for at least 10 years. But we'll see. What do you all think? I'm running tight on time. I'm running tight on time now because I'm supposed to take my mother somewhere and she's going to kill me. But I'll do it. Yes. Impact. So Vanessa says, please do a tax video, Mr. Tax Strategist. Do it like they do it. Okay, I do. Yep. Exactly. So Vanessa knows exactly what I'm talking about. And Vanessa is basically referencing what I'm talking about in terms of how Black folks can use the tax system as their own personal reparation system. And I mean, there's a lot of things going on right now that I don't necessarily agree with. I'm not going to get into that now because I talk about politics, but I usually talk about politics when it's directly related to finance in some way, shape, or form. But I'll say this. I don't think any reparations movement right now is going to yield any fruit in the next 5 to 10 years. And that is not me being dogmatic or hating on them or even trying to say that the government should be let off the hook. The government should absolutely pay for reparations. But we always have to straddle the line between what's idealistic and what's pragmatic. And I'm getting older. I have grandchildren. I don't have a whole lot of time to be idealistic. But to be honest, and this might sound like double talk, there's always a need for somebody to be idealistic, right? Because that's how you push the world further. But typically that's for the younger folks, right? But, you know, right now, my goal, my mission is to create more financial rebels, people who can recognize that the programming that they've had in terms of money is bad and reprogram themselves, recognize that they got to start investing and developing an investor mindset and start taking risk, smart risk with their money. All right. But yes, Vanessa, I'll do that video. Wakita, how are you? I hope I said your name right. Let me know if I did. Javon Christian, yes, I invested with Vanessa Braxton. Awesome. That's what I'm talking about. So we used an auction-like platform to invest in a Black-owned business. That Black-owned business will then turn and create more Black jobs for Black people in Black communities. That's what it's all about. Yes, use the system numbers. Absolutely. We created the system. Why shouldn't we use the system? It depends on the profit you're looking for. Chris Patton, what are we talking about? It depends on the profit you're looking for. And after I answer Chris's question, I gotta run because I got a mama that'll hit me. So, you know, I can't be playing around with her like that. Oh, I'm missing some of the comments. I'm sorry, y'all. Yes, young people have more risk. Young people can take more risk. Young people, the reason why young people can take more risk or because they're young, right? So the major goal of a lot of people is retirement. I'm not really one for retirement. Like I don't ever plan to retire, right? That doesn't mean I won't have a bag put aside so I can live and do what I want. But retirement, in terms of just chilling, doing nothing, that don't sound sexy to me at all. But I'll say this: if you are 20 years old and you're just getting into the workforce, you can survive a market meltdown, a depression, a recession much better than somebody let's say 60 and they have 5 years to go into retirement, because the 60-year-old needs to make sure that their money's certain. They don't have a whole lot of time for the market fluctuations. They ain't got time for that. They got to make sure that money's locked up, because what happens in retirement, you take all the money that you saved, right, and you turn it into a paycheck. Just a quick example. If you got $1 million and you put that whole $1 million into something that pays a 5% dividend, that 5% dividend now turns into annual revenue of $50,000 a year, right? So that is kind of what happens with retirement when people get into retirement. They save their money up and then they kind of create a paycheck for themselves. Usually they have multiple streams of income, whether it be money from a pension, money from a 401k, maybe some money that they make from a side hustle or a part-time job. But then they have all those things to sustain themselves when they get into retirement, and they no longer generating money for themselves. All right. 20, 35. Oh, I think I got what you were saying, Chris. So you want me to talk about an ideal portfolio for each one of the demographics, for each one of the age groups or people in different seasons of life? Yeah, I can do that. Thank you. That's actually a great idea. I'll do that. Let me write it down before I forget it. That's actually a very good idea. Thank you for that. Gratitude. Thank you, sir. Put links here so we can, like, I'm not sure if you're talking about for me or someone else. Each platform. Not sure what Javon was laughing at. I think Dutch Brothers is coffee. Oh, okay. I never heard of Dutch Brothers before. So y'all schooling me. Okay, so Paige Shelbourne asked me, are EFTs good investments? So let's correct that a little bit. All right, Paige. Good question though. Are ETFs good investments? ETF. So ETF stands for exchange traded funds. Again, exchange traded funds. And what an exchange traded fund is, you just think about like this cup I have here. I can put anything in this cup. And that's what an ETF is. It's a cup or a basket or a bucket. And you can have inside of that bucket, inside of that bucket. You can have gold inside of that bucket. You can have currencies like the yen, the Japanese yen, or the European euro, or the Great Britain pound, or sterling, the Canadian loonie. You can have all those in its cups. And so they have those different cups or buckets, and they trade on the markets. If anybody knows what a mutual fund is, a mutual fund is basically a cousin of an ETF. Difference being, mutual fund, you can only find out the pricing of it or what's been made or lost throughout a day. At 6 o'clock when they settle up, the ETFs, they trade all day long. So you can buy and sell them as you want, as you please. Yeah, I do. I don't do so much as now. I mean, so my background, 20 years in finance, between accounting. I'm a product of a Black-owned business. My father was an accountant, worked for what they call the big 8 firms. Your Arthur Andersons, your Ernst & Youngs, and some of the others who don't even exist anymore. But yeah, from there, I would be in his office. I've been doing taxes since I was like 12 years old. Hated it. Became a financial advisor, then an investment analyst, and then I became a portfolio manager on Wall Street, where I got to invest stocks and bonds for various portfolios. I've worked at a couple $1 billion firms. I don't have $1 billion yet, but I got to hang out with a few and manage the money for not $1 billion, but deca millionaires. several deca millionaires, 10 million or more. So, but the majority of my business now is tax. But I love the markets. I love the markets for the potential that they give to regular, everyday people. There's some caveats there. Oh, Vanessa sent you here. Well, thank you, Vanessa. But I also like the markets. Y'all got me going down this black hole, right? And I mean that in a positive way. But the markets don't care about your color. The markets don't care about your sexuality. The markets don't care about your age. You got $1 to put up, you can put it in the market and make 2, or you can put it in the market and lose 2 or more. So that's why I like the markets, because it doesn't care, so to speak. Are there some backdoor shenanigans going on? Sure. But that's with everything. I don't care how pure it's supposed to be. Go to your local church, and I am by no means a negative detractor of churches, but you will find shenanigans in churches, just like you'll find shenanigans in government. You'll find shenanigans in the mosque. You'll find shenanigans in the synagogue. Anywhere people are, there's some shenanigans going down. All right. So Chris said, you mentioned how much profit Starbucks is only give you a certain degree of profit. Starbucks will give you, they don't give you all of the profit, but they'll give you a large part. But you catch the profit in the overall price appreciation of the stocks. Yeah, I do need to go. You are right, Chris. Thank you for that save. I just felt bad because the broadcast messed up. But I do a broadcast every day. Like, comment, and share this post if you enjoyed it. Also, like the Finance Rebel page. And if you want to talk money all week long, every day, join the Finance Rebel Academy. Again, thanks everyone for being here. Tomorrow, Saturday, I'll probably do a broadcast Saturday. The only day I usually take off is Sunday. But I will see you all soon. You all have a great night. Thanks again.